This week, America celebrates 250 years of freedom, 250 years of hard work, 250 years of sacrifice, and 250 years of parents building something better so their children could inherit more than what they did. That's the American dream. But here's the uncomfortable truth.
As we celebrate America's 250th birthday, we also may be witnessing something we've never seen before in the history of this nation. For the first time since 1776, an entire generation may fail to pass the generational wealth to their children. Let that sink in.
And it's not because they don't work hard. It's not because they don't care. Not because they made bad choices, but because they're choosing not to. Before 2008, if you had a heartbeat, you were approved. Congratulations. You passed go. It was a free fall. No income verification, no down payment, no documentation. Anyone could literally buy.
Then 2008 hit. Everything collapsed. From 2008 to about 2014, the shit literally hit the fan. Reality hit. Enforcement had to happen. The government fixed what the previous generation messed up.
And from 2014 onward, Dodd-Frank, it locked everything down. Lending standards got stricter and stricter. Down payments, they went up. Credit requirements, it tightened. And income verification became a real thing. But here's the truth. By the early 2020s, qualified buyers could actually get approved again.
Except they're not buying. They're choosing to rent. They're waiting for rates to drop, waiting for prices to fall, and waiting for that perfect moment.
And they don't realize that that choice actually costs them. Every month they wait is a month they're not building equity. Every month they wait is generational wealth they're not creating. And every month they wait is something they can't pass to their children. They're choosing to be renters. And that choice is skipping an entire generation from building wealth that defines the American dream.
Happy 250th birthday, America. You finally have the opportunity, and you're choosing to wait forever.
And because understanding where it came from changes everything about what to do next. So invite all your friends to this party. Let's get ready to blow these candles out. Stay with us. "250 years ago, this country was born on a radical idea. Ordinary people could own land. That wasn't normal in 1776. Everywhere else in the world, land meant you were an aristocrat. It meant inherited wealth, and it meant you were born into it or you never touched it.
But here's what most people don't realize. In the very beginning, owning land in America was still only for people with cash, real money. When the federal government needed to fund itself, they didn't tax. They sold the land. The Land Ordinance of 1785, 9 years after independence, set it up. 640 acres minimum, $1 per acre. That means you needed $640 upfront just to get started. Whew.
Yeah, and that's $640 in 1785. Do you know what the average worker made back then? Maybe $50 a year, if that. So you're asking someone to save 13 years of wages just to buy the minimum plot. Most people couldn't do it. So what did they do? They went to the frontier, cleared the land themselves, and built cabins with their own hands and proved they could survive it.
That was the American promise. But it wasn't accessible. It was a earn it or take it. And for 200 years, that stayed true. Mortgages barely existed. If they did, they were brutal. You needed 50% down, the loans lasted 5 to 10 years, and then you had a balloon payment. You either refinanced it or you lost the house.
That's right. And let's fast forward to the 1930s. The Great Depression hits. Millions of Americans lose their homes to foreclosure. The system is now officially broken. FDR comes in and says, hey, we need to fix this. He creates the Federal Housing Administration, FHA for short. And suddenly, mortgages, they become standardized. 30-year fixed terms, fixed low rates, low down payments. For the first time, an ordinary person could actually afford to buy a home.
And then something magical happened. The 1950s, post-World War II, the GI Bill creates VA loans. Suburbia explodes. A factory worker, a teacher, a mechanic, they could get a 30-year mortgage on a single income. In 1981, the median first-time homebuyer was 29 years old. I'm going to say that again, 29, one income. It was amazing.
Yeah, Manley. I mean, that was considered the golden era. That was when American Promise actually worked. For the first time in history, home ownership wasn't a privilege to the wealthy or the aristocrats. It was accessible. It was normal. You graduated, you got a job, you saved for a few years, and then in your late 20s, you owned a home. You built equity and you passed it to your kids.
But then something changed, and it changed fast. Because here's where the story gets uncomfortable. We're just not in that era anymore.
Greed, for lack of a better word, is good. Greed is right. Greed works.
So let's be specific about what broke. And I want to start in the early 2000s because that's where the real story begins. The government wanted home ownership for everyone. That was the mission. HUD set targets. Fannie and Freddie Mac were pressured to buy affordable housing loans. The message was loud and clear. Expand lending. Get more people into homes.
And Wall Street heard that message loud and clear. Banks, they realized they could write any loan they wanted because they didn't have to keep it. The originate to distribute model started. A local broker writes a predatory loan, gets paid upfront in fees, then immediately sells it to Wall Street banks. The broker, they're gone. The risk, it's somebody else's problem now.
And that's when products really got insane. Ninja loans. No income, no job, no assets, no problem. Stated income loans, which were basically liar loans. You could say you made $300,000 and they'd approve you. No doc loans, no down payment required, 100% loan to value. If you had a pulse and a decent credit score, you got approved.
Yeah, because the lender, they didn't care if you could actually pay for it or not. They made their money on the origination fee and sold the note to Wall Street within days. Wall Street bundled thousands of these garbage loans together into mortgage-backed securities. They passed them to rating agencies who slapped AAA ratings on them because home prices were rising and supposedly they were risk-free.
Meanwhile, the Federal Reserve kept interest rates artificially low after the 2001 dot-com crash. Cheap money flooded the market. Everyone assumed real estate prices would go up forever. Speculation took over. People were flipping homes, buying investment properties they had no business owning at all because lending was so loose you didn't even need to prove that you worked.
That's right. And then 2008 officially hits. The whole thing collapses. Millions of foreclosures start happening. The financial system almost dies. And the government's response is Dodd-Frank. Massive regulation, tons of oversight, new underwriting standards with appraisal requirements, income verification documentation, everything gets locked down.
And then that's when the pendulum swung too far the other way. Banks got scared. They tightened lending standards so much that even qualified buyers started getting rejected. Down payment requirements went back up. Credit score requirements got stricter. Interest rates for anyone who wasn't pristine credit, it shot right up.
Yeah, so now you've got a completely different problem here, right? I mean, before 2008, lending, it was lawless. But after Dodd-Frank, lending was so restrictive that an entry point for first-time homebuyers moved dramatically. You needed bigger down payments, better credit, stricter income verifications. The system went from too loose to now too tight. And ordinary American people, they got squeezed right in the middle.
That's why the median first-timer aged. They couldn't qualify. They didn't have a big enough down payment. Their credit wasn't perfect enough. So they waited, they saved, they waited more, they tried to save more. By the time they could qualify, they were 40 instead of 29.
Yeah, and now the current administration, it's trying to find middle ground. Less HUD oversight, fewer mandates on lenders, but the guardrails, they're staying put. We're not going back to ninja loans or liar loans like 2008. we're trying to loosen things up just enough to let qualified buyers back in without inviting another 2008.
Of all the ideas that became the United States, there's a line here that's at the heart of all the others. But when a long train of abuses and usurpations, pursuing invariably the same object, evinces a design to reduce them under absolute despotism, it is their right, it is their duty to throw off such government and provide new guards for their future security.
So here's what we just walked through. 250 years ago, this country was founded on the idea that ordinary people could build something, could own something, and could pass it on. For about 50 years, from the 1950s through the early 2000s, that actually worked. A first-time homebuyer in their late 20s, one income, building equity, that was abundant. Then the system broke. Predatory lending emerged in 2008, overcorrection with too much red tape, and the entry point moved from 29 to 40 years old. That's not a market cycle, that's a broken promise.
But here's what matters. America didn't stay broken in 1776. We adapted. We created the Land Ordinance. We adapted again in the 1930s with the FHA. We adapted in the 1950s with VA loans. Every time the system broke, we found a way forward. That's the American DNA.
Yeah, and we're adapting again right now in 2026. This administration is trying to loosen lending standards without going back to 2008. That means options are opening back up. Alternative income documentation, more flexibility for non-traditional borrowers, lower down payment options. The pendulum is swinging, not back to where we were, but back to where we need to be, towards the middle. Not towards lawlessness, but towards access.
So here's what you actually do. Call your lender this week. Get pre-approved. Not because you have to buy a house tomorrow, but because understanding your actual purchase power changes everything. You might qualify for more than you think. You might qualify for less down payment. You might qualify with income documentation that's non-traditional.
Second, stop waiting for the perfect scenario. Rates dropping, prices falling, a miracle that matches what your parents experienced. That era is gone. Your parents could buy the same way their parents did, and you can't. You have to adapt. You have to be able to buy differently. A condo, a single family, a different neighborhood, a partnership with a family or a friend, a new build that's offering incentives. You have to think outside the box and be creative.
Because here's the uncomfortable truth. Every month you wait is a month you're not building equity. Every month you wait is rent that you're paying you don't get back. You're betting on a future rate, a drop, or a price fall that might never come. Meanwhile, that person who buys today, even at 40, they're building wealth.
Yeah, I mean, the first-time home buyer in 1981, they didn't wait for perfection. They bought when rates were 10% because they understood something fundamental. The house doesn't matter as much. The rate doesn't matter as much. The payment doesn't matter as much. What matters is that you're building equity instead of paying rent, making someone else rich.
250 years of American history teaches us one thing. Adaptation beats waiting. The people who win aren't the ones who wait for perfect conditions. They're the ones who understand the conditions and adjust their strategy and move anyway. That's what your grandparents did. That's what you have to do right now.
We never lost an American in space. We're sure as hell not going to lose one on my watch. Failure is not an option.
All right, let's ground this in where the market actually sits right now. Because history is context, but today's numbers are what matters for you and your next move. And I want to show you something about the actual cost of waiting.
Yeah, let's get into it. So the 30-year fixed mortgage rate is at 6.5% as of this week. The 10-year treasury yield is at 4.37%. Rates are basically flat. On a $400,000 mortgage at 6.5%, your payment's roughly $2,500 a month before taxes and insurance.
But here's what people don't calculate. Let's say rates drop a full point. Let's say they drop to 5.5%. That same $400,000 mortgage payment drops to about $2,300 a month. You saved about $200.
That's it. All the hype, all the craziness, $200 a month. That's the miracle people are waiting for. Meanwhile, in the year they waited for that drop, they paid $1,800 a month in rent. That's $21,600 a year. Rent that builds zero equity. Rent they'll never see again.
You're trying to save $200 a month while you're losing $21,600 a year in equity. You're trying to save nickels while you're losing quarters. And if rates don't drop, if they stay at 6.5% or go higher, you've waited a year, you've paid over $21,000 in rent, and now you're buying the same house that costs more because of inflation.
And that, ladies and gentlemen, is the gap. That's the entry point that keeps moving later because of the indecisiveness that we're seeing today.
In the math, it doesn't work because it never does.
Today, we celebrate our Independence Day.
This week in America, we're celebrating 250 years of freedom. Fireworks, backyard barbecues, ribs, chicken, family, friends. Don't get me wrong, I love every minute of it. But while we're celebrating all of it, we're forgetting about what we're really celebrating. The greatest gift our founding fathers gave us. It wasn't fireworks, it was the opportunity to own property, build wealth, and leave something better for the next generation.
That's right. And for 250 years, that promise helped millions of Americans create generational wealth through home ownership. But today, that promise, it's under pressure. It's almost extinct. For the first time since America's founding, millennials and younger Gen X families could become the first generation that doesn't pass more wealth to their children than they received. Not because they didn't work hard, not because they didn't care, but because too many never got a chance to build it. Because of fear, because of the inability to make a choice.
This isn't really about houses. It's about the American dream. Homeownership has never been about having a roof over your head. It's been about America's greatest middle-class wealth-building machine for over 250 years.
And if we stop passing that opportunity from one generation to the next, what exactly are we celebrating here? Call your lender this week. Get pre-approved. Stop waiting. Stop timing yourself out of the market. The system broke, but it's being fixed, and you can claim it right now. We're Anthony and Manley, and this is the Mortgage 101 podcast. If this hits different, like it, subscribe, and share it with one person barbecuing in the backyard they don't own, celebrating a freedom they're choosing not to claim. Tell them it's time to move. We'll see you next week.
Happy birthday, America.
Girl from the heart of Wisconsin to the waves of Hawaii. Manley and Anthony keep it real, not salesy. Breaking down rates and the truth you need to know with a little soul and a little homegrown flow. It's the Mortgage 101 podcast where real talk meets home at last. Manly's got that Midwest soul. Anthony brings that island roll when the market swings and you don't go fast.